So here is a trade I'm currently in. I opened yesterday. It's on Johnson & Johnson, ticker symbol JNJ. This strategy I have dubbed to be called the inside day breakout. So you can see the horizontal lines, those white lines wrapped around that red candle, the high and low range of that red candle. That's the inside day, defined as the open and close. Is within the range of the high and low of the previous candle. So that previous green candle has a high and low, and then the inside candle, the red one, is where the body of the candle or the open and close range is within the previous high-low range. So once I see an inside candle, I wrap those horizontal lines around it, then I set a price alert at that high of 235.83, and once price trades above that high, I get an alert on my phone, so then I can open up the app or on a desktop platform, go to the chart, analyze it, decide whether or not I want to take the trade and what kind of trade I want to make, whether it's trading the shares outright or if it's an option strategy, what kind of option strategy. And that is determined based on various factors that I might or might not get into on the video. So as you can see, let's start from the beginning. We have an inside candle. Yesterday it broke the high of that range, the high of that candle, as indicated by that blue arrow. It also broke out on high volume. You can see on the lower portion of this video that highlighted histogram bar is above average volume on breakout day, so that always helps. An entry is basically taken as soon as it breaks the high of that inside candle. So once it did, I decided I wanted to trade shares because I think this stock is fairly slow. Yeah, it's got an ATR percentage of 1.7% daily. So that means on average over the past 20 days, it moves about 1.7% each day. Since it's a slow mover, I decided not to trade the shares and do an option strategy. And if it were a fast mover, you could do a straight call or put, but because options have theta decay or time decay, I chose for a debit spread to mitigate that. And all I needed to do is be above 240 next Friday at expiration. Currently it's already above 240, so we're in a safe zone. Next week's expiration, February 13th, I chose an at the money spread at the time, now in the money, 237.50 by 240 debit spread. So it's a $2.50 wide debit spread, which means it's going to be worth a maximum of $250 at expiration as long as it's in the money. I paid, I think, $1.26. And so if it's going to be worth $2.50, I paid $1.26. That's 98% gain on my investment, which is a pretty good deal for a week.